I want to go to this line from your notes because this really encapsulates the entire conversation on Tesla as I see it. Investor sentiment appears driven more by long-term narrative than by near-term fundamentals. You can certainly see that playing out in the stock price, in the valuations. But you take a look at the near-term fundamentals, as we were just discussing with Ed, adjusted earnings per share came in at 50 cents in the latest quarter. That is higher than analyst estimates. What do you make of some of these figures?
Well, energy storage did really well, and this is a really good business for Tesla, and they're continuing to double down in energy storage because the demand for energy is sort of like unlimited right now. So it's really nice to see that part of the business doing well with the deterioration of their core EV business. So that helped offset some of the decline, and certainly being profitable in charging and in energy storage helps offset the losses now that the EV company is having. But it still points to when in this future will Tesla actually generate new revenue from any of the things that Elon's talking about.
Well, on that note, I'm curious to hear what you make of that $2 billion agreement to invest into XAI. Again, as we were discussing with Ed, the AI business theoretically will help power some of those initiatives when you think about humanoid robots, when you think about full self-driving, for example. And I'm curious what you make of it.
Well, it's also powering pornography and other pretty nefarious things. So, Tesla shareholders are now involved with that. And so, I think that XAI investment from Tesla, is sort of a weird thing considering they took Tesla's chips and engineers to make XAI, and now we're paying for it. Why isn't XAI a part of Tesla? It should have been from the beginning. I don't know. But those are questions shareholders can decide. I think it makes sense for Tesla to invest in XAI. They have $44 billion in cash doing nothing. And so Elon needs the money to build XAI. And so he's going to use Tesla for that money. And I don't think shareholders should be confused. Elon's going to do what he wants with his money to support his money-losing operations.
Yeah, and it's really shareholders' money, too, not to be pedantic about it.
But no, it's not. It's not. The shareholders have no say in this company. It is not a traditional investment like other companies. It's Elon's company, and Elon will do as he wishes with his money. And that's, if you invest with him, you are riding on the back of the bus, and you better enjoy it.
All right, Ross, fair enough. So I have a question, though, about that money and whether that becomes a concern, given the numbers that we saw with the 3% drop in revenue, as Ed was talking about, 30% drop in free cash flow, capital expenditures going up. And he lays out, I don't know when this stuff is going to materialize, but the Cybercab, the Tesla Semi, and all these other things that he says are on schedule for volume production in 2026. I mean, I almost hate to ask you this question, but are these realistic goals?
Why do you hate to ask me the question? Because you know it's absurd.
Okay.
Yeah. I mean, right. I think that's how you frame the question is when he says these things, they have no credibility. I call them hallucinations. They're visions that he sees that he hopes to be true, but aren't. And so I think investors have to be aware it's going to be many years before the Cybercab is a real business, and certainly robots, I don't even know how long. And I think investors are fine with this sort of like long-term vision of Tesla, obviously by the stock price. But I think when you're talking about like business economic fundamentals of the company, they've been deteriorating for the last 3 or 4 years. And you can see it in the annual numbers that they put in the shareholder deck with margins and profits just going down consistently. So, you can kind of put this in any way you want. It's 100% bet on Elon and this stuff working out. And I just don't know.
Well, I mean, and to that point, I mean, look, I mean, anyone with the Bloomberg terminal, really any sort of functionality with regards to look at their earnings trajectory, you can sort of see where this company is headed. But at the same time, we've been writing a lot on Bloomberg about the valuation, the multiples, the fundamental multiples for this company, which are just miles ahead of almost every other company out there. And I mean, you know this, Ross. We went through this a few years ago where everybody was looking at the fundamentals and they were awful. And yet we still saw that multiple continue to rise, and people are putting much more of a premium on the future and to a certain extent on the ties to other parts of the, I guess, the Elon Musk ecosystem.
100%. And I think if you look at it from a shareholder perspective, this is a stock that has gone nowhere over the last 4 years. And so, when you look at its 5-year return compared to the S&P, it's now less than half the return if you just invested in the market. So Tesla shareholders aren't doing so great. It's not like if you invested in Tesla 5 years ago, you're like rich now compared to investing in NVIDIA, for example, which is one of our top holdings at my firm. And so, when you actually compare Tesla's performance to its peers, whether it be Google or Microsoft or Meta or whatever, it's not very good. And so investors are paying the price for this because there's a limit to what outrageous valuation people are willing to assign to this. So it used to be 100 times earnings was Tesla's sort of like multiple for a long time. Now we're trading at 250, 300 times earnings with earnings not going up.
Yeah.
It's like gravity will eventually come. And so one way or another, either they're going to deliver on the promises this year or gravity is going to come for Tesla. And that's why I say this year is a pivotal year for the company. And I hope they can deliver. But, let's be real. They've got a lot of challenges in front of them.